Hello and welcome back to the Ledger Lounge. I'm Katie and I'm here today with Brendan and Tom.
Hello everybody, I'm Tom.
And hello, they've let me back on.
Today we'll be discussing all things year-end and what it means for sole traders. First question, what does it actually mean for sole traders?
So year end for sole traders is what it says in the tin, so it's the end of their financial year for their business, their sole trade.
Yeah.
But nowadays with the basis period reform that came through, all sole traders will have the same year end, which will land the 31st of March. But so basically you draw a line in the sand, 1 year finishes and the next one begins.
As a sole trader then, many have probably not got accountants, perhaps do it themselves. What do they need to do to prepare for the year end, Brendan?
Well, preparation for the year end, as Tom says, because of the basis period reform, year ends are now 31st of March, 5th of April. In the revenue's eyes, those dates are one and the same. So most CIS subcontractors will have a 5th of April year end, and maybe some businesses, if they have an employees, etc., may have a 31st of March year end, but 5th of April year end as well. It depends on the size of the business, depending on what they need to do. If you've got a sole trader subby, so if you're coming up to the year end, you need to make sure that you've got all your receipts in place, you've got all your monthly CIS vouchers, so that they're all ready to either provide to your accountant, or if you're going to do it yourself, to have all that information to hand to do your individual tax return. Obviously, if you're a sole trader and you're a business, say you can be a sole trader or a partnership that has, say, maybe 5, 6, 7 employees. There's different things that are coming to play with them. It's more of a business, and you need to look at planning in certain aspects of capital allowances, potentially reduce your tax bill investing in your business. If you're looking coming up to the 5th of April year end, again, personal pension contributions may come into it. And it's just staying on top of your books and records so you know where you are.
Yeah. I think for perhaps sole traders that have got a proactive accountant, decisions can be made within the year prior to the year. And like you just mentioned before, pension contributions, if they've made a massive profit that year, what can we do to reduce my tax bill? Pension contributions, capital, buying plant and machine, reinvest in it. And I suppose that links to the tasks that they can spread over the year to make it easier is planning, speaking to your accountant.
I think it is a case of the early bird catches the worm. I think those that are on top of it, keeping it managed and have a good eye on things are the ones that get to benefit from it. Things like capital, they can tax plan a little bit better than someone who leaves it last minute, or the year end has already passed and it's too late to do anything now.
Yeah.
So it's a good practice, isn't it, to be on top of things leading up to year end and to be aware of the year end so it doesn't catch people out.
Yeah. I think a lot of people mistake the self-assessment year end and the sole trade year. They always think it's the same, don't they? What is the difference between that, your personal tax return and your year end as a sole trader?
Well, historically, you could have different year ends, but like I said, because of the basis period reform, everyone's been brought in to having, if you're a sole trader, your year end is 31st of March, 5th of April. So now it does tie in very well. So the tax year end will equate to a business's year end. Historically, people had business year ends. It could be any date in the year, and you could be like 18 months behind with your tax. So, but the HMRC reformed it. It was a bit of a pain to do it, and we
it took a couple of years, didn't it? But
the basis period reform, your transitional profits that you had to calculate, and it was like finding unicorn teeth trying to get the overlap profits from the revenue. But we managed to do that for the majority of our clients.
Yeah, and some sole traders prior to everybody having the same year end now, why would they change the year end? They used to be able to change the year end partway through the year, extend it, shorten it by a day.
It was all for tax planning. So if you went back years, I remember a lot of dentists or medical practices, if they were sole traders, had a 30th of April year end, which meant they effectively delayed paying their tax on their profits that they made in the business by 18 months, which was great for cash flow. But with this basis period reform, it's all caught up on everybody now.
Yeah.
So they're all straight. So it was for tax planning reasons, or if they set a business up on, say, in July as a sole trader, they just wanted to trade 12 months to see how they'd done for 12 months. They ended up with the July year end. I mean, we've had clients with the 17th of July year end as a sole trader just because that was what was done historically. I think it's all changed now. So the year end corresponds with the tax year end.
Yeah.
So
I think in the past, you could just set up, couldn't you? And if you didn't know any better, you'd set up on the 1st of June.
Yeah.
And you'd just be working and you wouldn't know anything about these kind of things. But so nowadays, people are more clued up. And things like this, aware with the base reform on the 31st of March year end. But back in the day, people would just, I'm just going to start my business today.
Yeah. And they'd just start the business, find an accountant, and
that'd be
quite often the accountant did what they was there to do. Submit the returns. Perhaps never really had a discussion with them. Do you know you can extend your year end so it's the end of a month or
that's it, and it's
the end of
probably,
March or whatever.
It's probably been like that for 15 years, and it's just always been that. And then things like this basic period form come in, and then it kind of catches some people out with it.
I think to be fair to the revenue, we're talking about it now, it simplifies it, doesn't it? So everybody knows as a sole trader that your year end is either the 31st of March or the 5th of April.
Yeah, and I mean, even on the flip side for us, although we're going to have many year ends being March now, we can plan our work, which jobs are due and when, rather than it being January, February, March.
Well, I suppose
7 in
it makes it
April,
easier, doesn't it? Every job is due at the same day.
Yeah.
Every sole trader is going to have 31st of March year end, and it's going to be due for filing the January following, isn't it? 'Cause it's going to be part of their tax return. So at least from day one, then you've got your full list of what needs doing.
I mentioned earlier, like the difference between self-assessment year end and sole trade year end. So you don't report your sole trade. You don't send it to HMRC or anything. It's all reported within your personal tax return, isn't it?
Correct, yeah. So the accounts that you produce for a sole trader, if you do in fact actually produce accounts, are never filed with anywhere. They're never filed at HMRC or with any statutory bodies. It all forms the basis of your individual self-assessment return. And your individual self-assessment return needs to, say the year end was 5th of April 2026. Your self-assessment return doesn't need to be filed until the 31st of January 2027. So you have got a long period before you have to file your tax return. However, as we know and we advocate, the earlier you do it, the easier it is for you. You know what your tax liability is, you can plan, you know where you're going. For example, if you're a CIS subcontractor, the majority of CIS subcontractors would probably want
They want it done early.
because they get a rebate because they're having 20% deducted at source. And as long as they don't become a high rate taxpayer and their earnings go over 50,000, their taxable earnings go over 50,000, it's highly likely they will get a rebate. So if their CIS and their taxable earnings are over 50,000, then it's highly likely that the rebate will come down below 50,000. They'll be due a rebate and they'll want the return filing as soon as possible.
Yeah, and also we've just mentioned that your tax return's not due till the 31st of January. The change is now with MTD. Some people's aren't. They are all due in January, but other people are going to have to be reporting more than once a year now.
Yeah, so
who are those people? But
yeah, so this is part of that. So this doesn't affect limited companies, but this is where the difference comes in. If you're a sole trader and you're earning over £50,000 turnover, which can be quite easy to do for any business, I suppose, any full-time business, you'll now need to report your earnings and profits every 3 months with HMRC. You don't have to pay any tax, but
you're letting them know.
You're letting them know how you're doing, I suppose. Yeah. And I suppose there's a lot, if you're earning more than 50,000, there's going to be a chance that you're already VAT registered, if not you're there or thereabouts.
Yeah.
In which case you're already reporting quarterly anyway. It's just an extra form to fill in, I suppose.
Yeah.
But at the same time, it's HMRC almost forcing people to be proactive when it comes to tax planning.
You can hear the pros and cons of that, but I always think if people are reporting more timely, the HMRC and government can make better decisions rather than based on data that's submitted on the 31st of January but relates to everything up to and including the 5th of April the previous year. of which people, by the time it comes to January, haven't got much money left.
I think there's a lot of pros anyway. I think it's going to help keep people compliant.
Yeah.
It's going to help people manage cash flows. It's going to stop late payments. It'll give the government idea on their budgets in terms of how much tax are we expecting to be receiving, how much are we expecting that's going to be paying in rebates.
Well, just jumping on the back of that late payments, I think it was mentioned in a previous podcast before, the amount of money in the UK that isn't received due to late payments for small businesses, it's high.
Exactly.
Extremely high. I can't remember what the exact
staggering
figure
amount,
was.
isn't it? It is a staggering amount.
Yeah.
And this comes back to what we were talking about, Katie, about being proactive. So even if you've not got an accountant or you've got an accountant, it comes to a good accountant will be a proactive accountant who's going to help you through this, who's going to advise you your end is coming out, he's going to come and have a chat with you, he's going to look at your books and records, see how you've done, and can sit down with you if you're a sole trader. Say, okay, listen, your van is coming up to the, I can see in your records you're spending a little bit of money on your van. Is it worth reinvesting it? The advantage is reinvesting in your van and buying a van will have this impact on you in terms of your tax liability.
Yeah.
Okay, you've done very well. You've earned some money. You're going to be paying higher rate tax. If you make a lump sum personal pension contribution, it doesn't affect your profit, but it increases your nil rate band, which reduces the amount that you'll pay at the higher rate of tax. It's all about assisting businesses and helping them on. I think you get that from being proactive.
Yeah, I think, well, you've just hit the nail on the head where we should be having these, and we do have these conversations with clients. Because I bet a lot of people either who do their own or even pay the mate to do the books or whatever who does it on the side, they won't have these conversations. They just expect a bill at the end of every year, but they don't know that bill could have been
for some people, they'll just
it would have benefited them in the long run.
That's
They've
it.
got
They
a
just-
they've got a pension, they've got this.
they get a tax bill, and then that's it. They just pay the tax, and then that's done
it,
for another year.
yeah.
But this is where the advice can come in, can't it? You might even say to somebody, right, you're going to be falling into the MTD category. Are we going to maybe to look at possibly incorporating and moving the business into a limited company? And here can be the tax benefits. If you rather than having this as sole trader profits, here's what we can do if you were to take dividends or salary or a combination.
Yeah, no, definitely.
So keeping an eye on how the business is doing. If someone, it's probably too late now to do it proactively for MTD, but let's say to the VAT threshold, your business is probably going to hit that VAT threshold pretty soon. Is it worth looking to see what we can do to help, to get things in place ready for when we need to start reporting quarterly?
So we've mentioned quite a few times there, like having a proactive accountant, but what would you say, Brendan, are, like, I don't know, 2 or 3 benefits of having an accountant compared to somebody who doesn't have an accountant and logs into the government gateway on the 31st of January every year and just goes, turnover, this, that, the other, boom, done?
Well, it's each their own.
Yeah.
And people have accountants who do it, and the accountants will do it at the last minute for them, but the client doesn't provide the information. So I've said the main advantage of having a proactive accountant is that we can help with businesses. We can help with cash flow, managing the cash flow. We can help grow the business. We are there to work alongside clients to grow their businesses. And it's just that knowing where they are so they can plan.
Yeah.
And you said it's the small little things about picking up and saying, I've noticed that Joe Bloggs hasn't paid you for 3 months.
Yeah, is there a reason?
Is there a
bad
reason?
debt or-
Do you need to be proactively chasing them, or what's going on? And it's not coming and seeing that bad debt is there 9 months after the date. Said, I've not even contacted them. Well, if you contacted them, might be able to get it paid, and that helps the cash flow.
Yeah, no, definitely.
And it's reviewing a client's business all the time, and just those little snippets of advice. Some people don't want it. Some people just want to come in, hand all the stuff in at the end of the year, and say what it is.
Yeah, I
and
think
that's
that might be a
absolutely
cultural
fine.
thing for some people in, perhaps, I don't want to say it, but like traders, people in a trade. It's just that they know they're going to get a tax bill half the time. they don't really, not that they don't care, they've probably never really, they've not got time to sit with their accountant. They're busy.
Yeah. I think
doing
it's
the
they're
job,
very good at
running
what
the
they're
business,
doing.
yeah.
So they've not got the time or.
But I think if you can like grab them sometimes and physically sit them down and say, look, this is what we can do for you.
Mm.
Your tax bill can be reduced because of this.
Yeah.
They'd be like, oh, I didn't know that.
I think you're right. I
Yeah,
think
they're just too busy running the business.
they would really appreciate that.
Yeah.
'Cause people start a business because they have a passion for it or there's a need for it.
Yeah.
And they're usually very good at what they do, but they're not necessarily so good at keeping on top of the paperwork and doing their invoicing. And
I think a lot of
payments.
our clients now are
I think we've drilled
better.
it into them.
Yeah.
It's like you say, we're being proactive. If someone's got, if it's a sub or whatever it is, and they've got all their receipts in the van, they're going to go missing before the year end.
And then when you say, what did you spend at B&Q in, I don't know, June 2025?
Exactly, and it's not even
I don't
that,
know.
but in terms of compliance, if HMRC wanted to look into their tax return for the year
Yeah.
and say, can you give me all these receipts? And you'll say, well, I've not got them. But if you're being proactive and putting them in the system, and if you're using, image capturing software like Xero or Dext or something to keep a digital copy of that, then you can
Doesn't matter if you lose it
It doesn't matter if you
afterwards,
lose
it's
it,
already
but
there, yeah.
if you've got 12 months worth of receipts just in the glove box in the van, and you barrel
We
all
did
into
have
a
a
folder.
client, actually. Obviously, I won't say names. Was it last week or the week before that? I looked out the window and he was grabbing everything out of his glove box in his van, and I was like, oh God, I hope that's not my client.
And it says, and how many times we said, yeah, I had all the receipts. I'd got them. They were in 2 bags. The 2 bags, I took them all out of my van and I put them in kitchen. I mean, Mrs. had put them in bin.
Well, I had one where it drops. To be fair, it's still a shoebox full of stuff, but at least it's every quarter, not once a year.
Yeah.
And every now and again, I'll get a treat there, like maybe the kids' homework or something, just because they put every piece of paper in the house into this folder.
The kids had detention or something because they've not had
Not the one I got
back
to gossip. You think he's left you a £5 or a £10 in
Yeah,
there by accident as well?
Now and again. No, I always give it him back.
Parking ticket.
Be a great excuse when I haven't done your homework. My accountants took it. Dad's accountant stole my homework.
You've got an accountant, you're only 5.
You forget the dog ate it, the accountant had it.
Yeah.
Send him a digital copy of the homework on Dext.
Yeah, you could use it to store their homework.
Good thinking.
Well, I think that's pretty much it for sole traders, really. Is there anything else that you both
tax
might
planning,
want
tax
to add?
saving things?
As well, I think we've gone through all the tax planning, tax savings for sole traders. I think obviously the main thing, and I think you've done the podcast on it before, which is on the horizon, is making tax digital. Yeah. I think Tom and yourself mentioned the turnover of 50,000 threshold. That is for the last year. So from anyone with a turnover for over 50,000 automatically goes on to MTD from the 6th of April. The year after it drops down to 30,000, and the year after it drops to 20,000. So all sole traders are going to have to get themselves to grips with MTD.
I've got a question on this that
Good.
we've not discussed prior. So from April 25 to April 26, if from April 25 to, let's say, I don't know, August, September, you were CIS sole trader, then you've opened a limited company and you now paid a director's salary through that limited company. So from September to April, what happens then? Is that person supposed to then submit a return every quarter?
So what will happen is if you breach the threshold in the
Which is based
24,
on last year's
25 tax return, you are automatically enrolled into MTD. So if you are in MTD and from, say, April 26 to April 27, that happens, you will have to file the returns. If it changed and from April 25 to, say, September 25, you were self-employed CIS, and then you transitioned into a limited company, I think you have to go in online and you fill in the fact that, yes, even though you are automatically enrolled in it, you cease to be self-employed in the 25-26 tax year, and then they will exempt you for it. But apparently, reading all the stuff online, that is quite difficult to do,
Yeah, and
but
I
you
think
have to
they're
do it
going to want
yourself.
everybody to, eventually, everybody's going to be doing it
Well, I
quarterly,
mean,
aren't they?
if you're a director of a company, you are anyway because you're
Yeah.
filing PAYE.
No, yeah, it was
returns.
just like popped into my head.
No, there is an exemption. So if the 24-25, you're a sole trader and yes, you breach the threshold, you're automatically enrolled into MTD.
Yeah.
If, however, in 25-26, you cease to be a sole trader, then you're automatically enrolled into it, but then there's a form which has an exemption because I ceased in the 25-26 year. Therefore, from April 26, there's nothing to report.
Cool.
But again, you know, the discussion that we've had with what's come out in the budget, is it worth incorporating business anymore? Tax-wise, possibly not.
That
I think for
margin's
some
definitely
people,
getting smaller.
I think
isn't
there's
it?
It's
quite
gone.
a lot of
It's gone.
bigger companies that request. So my partner, for example, he was CIS registered, but then under the new structure of work that they've got from the government, it's requested that everybody goes limited because you're not just working for one company anymore. You're working for several companies under an umbrella of.
So yeah,
There's like loads of different companies involved, and they've all
This is
split
previously
to
where they
different
had
ventures and stuff. So it makes it easier for
yeah.
them, I suppose.
In the past, there would have issues with things like IR35,
Yeah.
wouldn't there, where it'd be one-man band limited companies who were just working for one person for the tax-saving benefits. Obviously, these little loopholes are things that have been closed, haven't they, by legislation?
Well, I think that's pretty much it then for year end for sole traders.
I think it is. I think we've covered it. And, you know, again, I would just back to any sole traders, just make sure, like Tom said, you keep all your receipts, you keep on top of everything. And even if you're doing it yourself, just be proactive so you know where you're at. So even then you can have a look at things coming up to the year end. So, you know, for you as the business, you know, do you invest in your business or to get your capital allowances? As an individual, if you're looking for tax saving as an individual, you know, your potential to put, depending on your earnings, you could put money into a pension fund. And then also for, as a person, do you want to invest in ISAs, which way also your money is going tax free? So I would say always, you know, seek independent advice for an IFA in relation to that. So,
And I suppose the flip side of that is also if you are a sole trader who in 5 years' time is looking in the future, in 5 years, I really want to buy a 500 grand house, currently renting. You're going to want to have as much through your sole trade as possible to be able to get a mortgage. So then there's the pros and cons of it is, do I want to save tax and reinvest, put money into a pension, put money into it, or do I want to?
Well, this is where they're quite effective tools because putting money into a pension wouldn't reduce your profits for the year.
No, yeah.
But you would save the tax still. Some people will try and minimise their profit for the year, which then they'll be stung when they come to get a house and say, well, you've only earned 25,000 this year, it's not enough.
Yeah, it's not enough. Yeah.
Whereas someone who maybe has earned 50,000 but bought a 25,000 piece of kit that they need and claim capital allowances are still going to be, you can then still show well, the business actually made 50,000, so the tax benefits are still there.
Yeah.
Or I've put it into the pension, I've saved the tax, but the business is still making money. Or, you know, I'm still making money as a sole trader.
Because I bet that always catches people out.
It
Well,
is.
it does catch them out.
I think that was a big one for CIS subcontract with subbies, weren't it? Where they wanted the biggest refund they can possibly get, so they're all these bills and everything, all these bits of kit that they're buying and everything, you know, anything they can possibly do to get their profit down as much as possible and get their CIS rebate has come back to sting them, especially, you know, going back in time when we had the business interruption grant that came out and it was based off your profits, weren't they?
Yeah.
And all of a sudden people were getting nothing or very little. And it kind of came full circle on them, didn't it? They saved all that tax in the past or had the rebates, but then something happens and all of a sudden it's not there.
and that comes back to being proactive. You know, if you've got a proactive accountant
Plan,
who's in
yeah,
discussing, is, you know, with the conversations, we've had the conversations, you know, we laugh and we joke with the rugby lads, the young rugby lads who are CIS and they're, oh, my mate down the pub's getting a massive rebate. Well, I said, that's great. What do you want to do in 3 years? Oh, I want to buy a house. Well, if you want to buy a house, you need to show you've got earnings, you know.
Yeah.
You can't just say, 10 grand a year, massive rebate, but then you can't get anything. You can't buy a house, you can't buy a car on finance because everyone wants to know what your earnings are.
Yeah.
It's part of the digital age, isn't it? Nowadays, it isn't like what it used to be. Especially with things like more, you would have the bank manager and you'd go in and you actually sit with somebody. It's not the same, is it, these days? Everything's digital. They want records of things. They want proof. They want to know everything.
If I was a sole trader now, and I'm talking to you as accountants, I'm not an accountant, what is one piece of advice you would give me to make my life easier?
I would say keep on top of your books and records. So when you get to your year end, whether it be the 31st of March or the 5th of April, you are in a position, or your accountant is in a position, to complete your year end and file your tax return as soon as practically possible after the year end. And that means it's done, dusted, put to bed. You know where you are. If you've got tax payable, you know what you need to pay in July, in January the next year. And if you've got a rebate, you know what rebate is and you know when you can get it. You can put that to bed and concentrate on growing your business.
The Ledger Lounge is brought to you by James Scott Accountants in Oldham, Greater Manchester. Please like, rate and subscribe wherever you listen to the show. To find out how James Scott can help you build a better business, visit jamesscott.com. This podcast is a QPod production. Visit kupod.co.uk for more information.